guys, John here. Today is August 24th, 2020, and I want to go over a little bit more in detail what I was talking about today on the Power Hour session, how the markets repeat themselves, but it's not just the patterns that we look for, meaning the smart money concepts, but it's also certain, I guess you could say, structure or certain movements that repeat themselves on small time frame to high time frame, and sometimes even the same time frame. So if you didn't see that session, I don't know. I guess you should have watched it. But I guess I can go over pretty much the same thing here, but obviously a little bit more in depth. So I'm showing you the S&P 500. All right, we're looking at an S&P 1 hour chart. And so this is what I was showing them today. Now, I don't have the markup on here because I want you to look at it first before I show you. So you can try and challenge yourself or get an idea kind of what it is that I'm going to be talking about. So the markets repeat themselves, okay? And you guys should know that. But a little bit more specifically, we are... Hold on a second. Side note. The S&P hit all-time highs today. All right, we're at all-time highs, brand new highs in the market. And so before we get to all-time highs, or before a significant level, because this happens in Forex, before a significant level gets hit, the market will basically hover around that lower high, and then it will run stops, usually prior to hitting the level that it wants to. So, excuse me, and you'll see that in the markup, but just bear with me for a second. So we've been calling for 3,400 for a while, okay? It's been months and months, and we're finally here. Now, leading up to that, this level right in here around 3,390, we were not at 3,400 yet, but we were just hovering around that level, not really doing a whole lot. So on my Facebook page, I talked about how the market would quickly, meaning it would have a fast move down to take stops prior to hitting all-time highs. Okay, and so I actually, when I put that out, it had actually, price had already actually taken this low, but not this one yet. So the market came down to this low and then rallied higher, retracement, and then boom, all-time highs. So now how was I able to decipher that this would happen? Now it wasn't 100%, I could have been wrong, but in this case, you know, it was right, okay? There's a very similar setup on this exact same chart, okay? So what I mean by that is you have two lows that got taken and then a move higher. So if you look a little bit more over to the left in this area, you'll be able to see what it is that I'm talking about. All right. So I'm going to go ahead and move forward. If you want to challenge yourself and pause the video and try and look at what it is that I'm going to show you before I show you, then pause the video here and then come back. And for those of you who are waiting for me to to show you, then we'll get on with it. So here you have that same chart, and this is what I was showing them on the Power Hour session. So this is the same thing I just showed you, how you had this low here that got taken and then rallied higher to all-time highs. And then prior to that, you had the same exact setup. You had a low here and a low here. Actually, this could be considered equal lows if you want to. Boom. Both of those got taken in a fast move down and a slow move higher. So the same thing that happened in setup 1 pretty much happened in setup 2. I just labeled them 1 and 2, okay? So it's literally the same thing, right? Just on a little bit different scale. There was a little bit more time. The second setup took a little bit more time than the first one, but that's fine. It's literally
to me, in my eyes, it's the same thing. They ran stops before moving higher. All right. So the Dow Jones is not at all-time highs yet, but I am looking at a little bit of intraday price action that basically is the market is telling me that the Dow Jones also repeats itself. So I'll show you that here. Now it's not going to be the same thing as S&P where it's running lows and moving higher. The setup's going to be a little bit different. Okay? So before you get into the chart, look at this area here first. Okay? Low, high, 618, and then continuation. That's a simple Fibonacci retracement, just low to a high, 618 retracement, and then continuation in bullish markets. So the first area I want you to look at is this one right in here. Okay, right inside this box, right? You had a low set here, gapped higher, came down to the 618, and then continued. Now, did it trade through the 618 a little bit? Yeah, it did. Okay. But you can go and measure this. That's the 618 there. And then if you measure this leg higher, right, you have the low here, the high right in here, 618 retracement, continuation, right? So it's the same thing from this to right here, all right? Now, obviously, this one is smaller and this one is bigger, right? It's fractalization, okay, if that's even a word, right? So now what I've done is the smaller one is you can already tell there's a gap or an imbalance that got filled. So, you know, that's easy. I don't really need to hold your hand on that one. But for the bigger one, I went ahead and added the New York session and then, of course, power hour, which we refer to as the profit-taking hour. So if you want to in your own charts, you can highlight the New York session. I think that's right. Yeah, 8:30 to 2 o'clock. And then 2 o'clock and after is what I refer to as the profit-taking hour, which is this. And we'll make it, I don't know, we'll just make it a different color. Okay, so it would look something like that. Now, if you want to break it down into smaller time frames, you can. Okay. And so I'm going to keep the lines up there. They're not trend lines. It's not an ABCD pattern. It's literally just Fibonacci level, low, high. Here, I'll even show you. Low, high, 618 retracement, and then continuation. Okay, so that's what those lines are there for, so don't get confused. And then I've also added, as you can see, the 28,000 whole number. All right. And then, of course, if we're in bullish markets, we want to buy below New York opening price. So where does New York open at? The opening bell is right here. And we'll need to label that the New York open. Okay. So New York opens, drops down, 618 retracement, rallies higher. Okay. And then, of course, right at the end of that profit-taking hour, right at the end of the day is when it tops out, and now we've been trading sideways. But basically, it's just patterns. Not like traditional Forex patterns, but like, you know what I'm getting at. So there you have it. All right. So that is what I like to think of when I tell you that the markets repeat themselves. Of course, you know, you're going to have to add smart money concepts. And the reason that I highlighted these red on S&P is because stocks fall faster than they rise. And so I was explaining that on stream, and you can easily tell because I've highlighted the fast move down, and then when price got back to where it was from where it bottomed out, you can tell how much the time difference between the two. Actually, that didn't really hit till over here. Right? So they fall in a faster pace than they rise. So however many hours this is, it took a longer time to recover. 8 or 9 hours here, and then it took a couple, a day or so to recover. So that's what I mean by fast move lower. And that's how you know it's a run on stops, is because of the speed of the market. All right. And then it wanted to really get to all-time highs, so we ran up there and then traded higher and higher and higher. All right. And that'll be pretty much it. The Nasdaq actually intraday rallied higher and then dropped intraday. So it's a little surprising. Let's actually go. I haven't looked at this today, so 8:30 is actually here. So draw this out. This is your New York opening price. So it actually opened, rallied, and then really just wrecked lower. I wouldn't necessarily call these equal lows, but I guess, well, by definition they are. Not something that I would personally trade, but there is equal lows right there. And so I guess the market was just too, I don't know. It was just ready to sell off, I guess. Let me check one thing real quick. I want to see if we got a divergence. Let me see. I feel like we did, but I just want to double check. ES1, NQ1, YM1. Just want to check a couple of different time frames here. Yeah, it does look like it. That is strange. That is strange. So you had, when did this occur? Okay, that does look right. It looks weird, but by definition, it's still there. So we'll go blue first. So the S&P was going lower from 7 to 8:30. So that's kind of what that looks like, the blue line specifically. And the Dow Jones, of course, was also going low. It was actually going a lot lower, a little bit more violently. And then the Nasdaq was actually running higher here. So there was a divergence there. That makes more sense than it just running up there for no reason. So divergence between Nasdaq, and then so Nasdaq sold off, and there you have that one. So that makes a lot more sense than it did by just trying to eyeball it. And this is why you want to go in and find specifics, because you don't want to just guess. Okay. It does look like there was another divergence that formed. Not something that I probably would have traded, but it does look like the Nasdaq was actually going higher here. The S&P was also going higher, and the Dow Jones orange is going lower. So that's a divergence as well. And then boom, all the markets basically rallied from there. So there's a little bit on divergence for you, how the markets go from one divergence to the next. They don't always have to. The markets can bottom out without forming a divergence, but there's a little for you on that. High of the day for Nasdaq was at this divergence, and then the low was actually down in here, but the afternoon session low was pretty much right here. So if we take all of this off and go back to candlesticks, let me just take these off now. So give me just a second. Actually, I'll leave that there. I'll leave this pink line here, and I will leave this one here as well. So for those of you who haven't been studying divergence, well, you need to, okay? But basically how the high of the day was here, the low of the day was actually here, but you get close to the low of the day right here. So divergence to divergence, and then we're actually trading back into the 50% of this range, so it makes sense that the markets are now moving sideways. That's just an eyeball, but I want to give you an exact measurement. So that 50% is about right there. And so we're near that, and so we are consolidating, which makes a lot of sense. 50%. All right. So there was definitely some interesting opportunities today. It's Monday, so I don't really start trading on Monday. I usually wait till Tuesdays in London before I start actually placing trades. But interesting movement today. There was a lot that kind of went on, so I don't know. Pretty interesting. But all right, well, that's really all that I have for you today. No need to make it longer than it needs to be, right? So here's one more look at the fractalization of S&P, and that is what I'm going to leave you with today. All right, so keep studying, keep grinding, and I will see you in the next video.